Do you remember how fast adoption was for the microwave in the 1980s? Well, maybe so, maybe not, but Bloomberg thinks the adoption of EVs could be just as fast as the adoption of the microwave. Wow. That's a wild statement. On top of that, here in this video, we're going to cover some comments that Elon Musk just made, as well as what in the world is going on in the markets today. But before we get into that, let's take a sip of the iced caramel macchiato. As you can tell, I don't like these things at all, seeming by how gone it is. According to Bloomberg, electric cars have just passed a crucial tipping point in 23 countries. Quote, convincing everyone to adopt a new technology can be a slog at first. The humble microwave oven, for an example, took 2 decades of lukewarm sales to reach just a tenth of US households. But then came the 1980s, and quicker than you could say Hot Pockets, microwaves had spread to nearly every kitchen. That fast part of the technology adoption curve is happening now with electric vehicles, according to a Bloomberg Green analysis of adoption rates around the world. When we first completed this analysis a year ago, 19 countries had passed what's become a critical EV tipping point. 5% of new car sales powered only by electricity. This threshold signals the start of mass adoption when technological preferences rapidly flip. Since then, 5 more countries have made the leap. The newcomers are Canada, Australia, Spain, Thailand, and Hungary. They join a cohort that also includes the US, China, and most of Western Europe. The trajectory laid out by these early adopters shows how EVs can surge from 5% to 25% of new cars in just 4 years. By 2026, 25% of vehicles sold globally will likely be EVs. Tesla has a market share of over 60% currently. Now you might be wondering, why is 5% so important? Bloomberg says most successful new technologies, televisions, mobile phones, LED light bulbs, follow an S-shaped adoption curve. Sales move at a crawl in the early adopter phase, then quickly once things go mainstream. In the case of fully electric vehicles, 5% seems to be the inflection point. The time it takes to get to that level varies widely by country, but once the universal challenges of car cost, charger availability, and driver skepticism are solved for the EV, the masses soon follow. In the US, the EV tipping point didn't arrive until late 2021, relatively late for a country with its spending power. There were reasons for that delay. Number one, Americans spend more time in their cars than any other populace, and drivers demanded longer ranges than early models offered. Pickup trucks and large SUVs, which make up more than half of the US market, were also slow to electrify due to their massive battery needs. Today, US EV sales are rising fast, up 42% in the second quarter compared to the same period a year ago, but haven't quite matched the explosive trajectory of other countries that crossed over. That could change as Tesla, the world's biggest EV maker, prepares to launch its Cybertruck pickup. And as competitors roll out EVs under some of the most iconic American brands, Chevy, Blazer, Silverado, Ford Explorer, and F-150, Jeep Wrangler, and Ram 1500, to name a few. In other news, Elon Musk is responding to a post from Robert Scoble and Edward Kaiser on Twitter, where they are discussing the computing power of Google. According to Alpha Betting on Twitter, Google will quite literally have more TPU V5s than OpenAI, Meta, CoreWeave, Oracle, and Amazon will have GPUs combined. Elon Musk responds and says, "We're going with both Dojo and NVIDIA. I think we will have the most interference silicon, given that every car has an inference computer. So that's a fancy way of Elon Musk saying Tesla is going to have the most computing power out of any other company, which is great news if you're a Tesla shareholder, because this computing power mostly is going to be training FSD and really speeding up the evolution of the human race as well as autonomous vehicles. Elon Musk also responded to Dirty Tesla on Twitter. He says, I wonder if Elon's saying 6 months is a real 6 months or really means like 2 years. I can't imagine Tesla is gonna let hardware 4 be missing beta for too long. Elon Musk responded and said, it's a real 6 months, maybe less. As we know, hardware 4 is a lot clearer. It runs on a little bit higher FPS, can make faster judgments in real time. Obviously not as good as your eyeballs, but in theory, if you want a autonomous vehicle to drive better than humans, you need to have some pretty good vision capabilities within the vehicle. And that's what hardware 4 is all about. Sawyer Merritt, in response to his own post about the 10,000 NVIDIA H100s that go live really anytime now, worth $300 million, he cites the source from Tesla itself in regard to Tesla's computing power and where Dojo mixed with NVIDIA, these H100s, will put Tesla's total computing power. And these numbers are mind-blowing. By October of 2024, so about 1 year from now, Tesla estimates that they will have 100 exaflops of computing power. Each exaflop is a measure of performance for a supercomputer that can calculate at least 10 to the 18th power, or 1 quintillion floating point operations per second. And Tesla's computing power is going to be 100 exaflops, which is 100 quintillions of basically calculations per second. That's just mind-bending when you think about how much computing power is going to be able to train FSD. It's off the charts. But with all of this good news, there's usually going to be some bad news. And we're getting a little bit of bad news. The Australian government says they will probably tax electric cars soon. The Australian Treasurer, Jim Chalmers, not sure if I'm saying that right, has hinted the federal government could introduce an electric vehicle tax in the coming years to recoup lost fuel excess revenue as people move away from petrol and diesel-powered vehicles. In other news, Hyundai is developing 350 kilowatt EV chargers to challenge Tesla. From what this article says, at least, it's only expected to be in the Korean peninsula. Obviously not North Korea, but South Korea. So I'm not getting any mentions of this actually being deployed in other countries like the United States, Europe, or China, but we will have to wait and see. Rivian's CEO has made a very strong statement today. Quote, I think the reality of buying a combustion-powered vehicle is sort of like building a horse barn in 1910. Imagine buying a Chevy Suburban in 2030. What are you going to do with that in 10 years? Gas stations will be slowly disappearing. Now, have you ever thought to yourself what a $30 million car would look like? Well, it is the Rolls-Royce drop tail called Amethyst. It cost around $30 million and only 4 will be built, each with its own unique theme. I'll tell you right now, even if I had it, I'm not spending $30 million on that. That's actually kind of crazy. That's probably why only 4 are going to be built. Kind of a cool car though, for someone that does have 1 out of the 4. At least cool in terms of there's only 4 that are going to be built. Joe Tetmeyer, thank you for what you do as well with your drone footage. Dude, it's off the chart. Make sure he sees this down below so we can thank him for all these beautiful images. He took a trip to the Tesla lithium refinery plant near Corpus Christi, Texas. And what really sticks out to me, just on top of the photos, is Tesla's EPS that we've seen coming better than expectations recently on recent quarters, but not maybe where it could be. Well, that's because a lot of money is currently going into projects that Tesla is funding. That's what you got to remember. Tesla has insane ROI numbers and ROE numbers. This developing, well, maybe it costs Tesla a little more in the short term to their actual bottom line net profits, but this is exactly what you want to see from a company. This again flies in the face of this weakening demand theory that some of Wall Street has. I just don't see it with all the expansion that Tesla is currently doing. This is a kind of bird's eye view, couple of photos of this site. And we do have a concept, the original concept photo that Tesla had put out as well, and that is right here. This is the official picture that Tesla had put out a while back. So construction is on the way, but not quite to ultimately the final destination just yet. And last but not least, not really specific to Tesla, but more specific to Elon. Congratulations, Elon. SpaceX has now hit a milestone of 5,000 Starlink satellites that have been launched in space and is now the world's largest broadband constellation. Starlink has 1.5 million internet subscribers in over 60 countries. Just kidding, this is last but not least. BYD reports strong earnings. Barron says it and Tesla are pulling ahead. Both are profitable, which few EV rivals can claim. Both are also boosting EV deliveries faster than the overall market, while BYD is increasing its profitability, closing the gap with Tesla. Monday, BYD reported its first half numbers. Sales and gross profits in the car business came in at roughly $21 billion and $3 billion respectively. Sales grew 66% year over year, gross profits grew 75%, and gross profit margins were 13.5%, compared with 12.8% in the same span of 2022, partly because the company is operating at a larger scale. The company delivered 1.2 million passenger vehicles and about 642,000 battery electric vehicles, or BEVs, up about 95% and 92% from a year earlier, respectively. That isn't bad. And this is great news for Tesla as well. You don't want to see Tesla's competition doing so bad it raises eyebrows on, is Tesla going to do bad? That would really be a sign that the Chinese consumer does not want to buy vehicles right now. And it looks like quite the opposite. It looks like Chinese customers specifically cannot get enough of EVs. This is great news for Tesla. But all of this good news does not necessarily translate into a green day for Tesla. Tesla stock at the time of recording this video is down just under 1%, down 0.77%, trading at $236.76 per share. Option activity today is a little bit more skewed towards the bearish side, with 44% positive order value. You have seen 582 hedge fund and institutional trades worth $168.01 million. This is all after we even got good news today. The Dallas Fed Manufacturing Index for the month of August came out at 10:30 a.m. Eastern Standard Time, and it came in at negative 17.2. Now, negative is not good at all, but the estimate was negative 21. So you came in much better than the estimates, and the markets are slightly in the green today, but not by much. Fed Fund futures for the next Fed meeting on September 20th, 2023 are pricing in a 20% probability of a rate hike and an 80% chance of a continued Fed pause. This really depends on the economic data that comes out this week. If the data is running hot, well, the Fed's probably going to raise rates again. If the data comes in line with expectations, or even worse, showing the economy is slowing down, maybe the Fed does indeed actually continue to hold rates where they are. The 10-year Treasury today is down about 3 basis points, coming off of the highs that we've seen recently at 4.34%, now trading at 4.21%. This is great. It's not as much pressure on borrowing or interest rates as we seen just a couple of days ago, but it's still pretty close to those highs, back at the same levels that you were at during October and November of 2022 when the S&P was trading at its lows. Tomorrow's big catalyst for the market will come out at 10 a.m. Eastern Standard Time. That is the JOLTS job openings. You are expecting 9.46 million. If this number comes in under 9 million, you probably see a face ripper rally for the markets. You probably see a 2 to 4% up move. If this number comes in around expectations, you probably get a down move. If it comes in higher than last month's reading at 9.58 million, you're going to be in for likely a pretty big down day. We are going to elaborate on this much more in the next video, as well as some alarming signs that we are seeing in the markets and some research that just came out from Morgan Stanley over this weekend that you really do need to know. So stay tuned for the channel for the next video. But that is going to do it for this video. Watch for that support at 222 for the downside, and watch to see if we can break above 240 today or tomorrow, or really at any point over the next couple of days. That will give you a clue to whether the stock is likely to rip higher or fall really over the next couple of weeks. If you get over 240, that's a great sign. If you fall back to 222 and you retest this 100-day moving average right here in orange and you fall under that, you're probably in for a test of about 200. But then again, the economic data is probably what would cause a larger up move or a larger down move. And again, we will go over that in the next video. So that is it for this video. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. My name is Michael Tyler. Thank you for joining me today, and I will see you in the next one.